Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, May 24th, 2007, and we had a little bit of a sell-off here today. The spiders closed down $1.40 at 151.04, just under a 1% loss. So not as bad as I think it might have felt like intraday. But yesterday I was saying that neutral short term, and the market was very extended. We have to be careful in here, and excuse me, and that a meaningful pullback shouldn't take anyone as surprise, a more meaningful pullback, and that's what we had today. So we had what yesterday, the reason I put it on this morning's comments too, that I expected volatility, is because we had this breakout, and then the market failed yesterday afternoon. It then attempted to recover, but this prior support acted as resistance, and then it was kind of a free fall from there. So the old phrase, from failed moves come fast moves, and a breakout from such extended levels a lot of times will fail to hold in the market. So if we look at the daily time frame, what you see is it looks like the market came down to this rising 20-day moving average. I think it brought caught people's attention because of this trend line here. This is a really steep trend line, and one that usually can't sustain itself for very long. So it was just finally, it's just inevitable that we got a break, and hopefully you had your stops in place and weren't hurt badly in here today trying to pick a bottom. I still don't think it's time to try and pick a bottom. A lot of times I miss these little bottoms because I'm waiting for more evidence on a short-term basis the buyers are in control, but there is no such evidence here on this 10-minute time frame, and I'm going to suggest that you at least stay out of the market instead of going long, but you have to use your own judgment there. That's what I'm going to do. I think tomorrow is probably a great day to not trade. It's a Friday before a long weekend. Volume typically is slower. Maybe people were trying to get their sales done before tomorrow so they could head out for a long weekend. I don't know, but the 5250 level broke and broke significantly here. Now we've got a declining 5-day moving average. All these other moving averages are declining as well. So short term, obviously, we're negative in here. And a little bit further pullback shouldn't come as a real surprise. One way you might look at as potential support is since this break past this high right here from February up to the recent high yesterday, the market came down and retraced 38.2%. And it's also at this level of prior resistance in here, and it's also at that rising 20-day moving average. So there's a lot of reasons to think there's potential for support here, but potential support doesn't put any money in anyone's pockets. Like I said yesterday when I was talking about the Qs, you don't want to buy at support. You want to wait for the buyers to take control. And when we take a look at the Qs, what we thought yesterday was that the market was at support right here because this prior level of resistance, number one, acted as support over here. And I said basically the market looks like it's at a level that should find support. You don't want to purchase it until the buyers retake control. And they didn't do that today, obviously. The market failed miserably in here. And now we've gone down to the next level of what potential support is. That's a $46 level. The 46.70 to 46.80 level that I had mentioned yesterday obviously failed in here. And now on a daily time frame, this could be setting up a bigger problem because of this failed breakout in here. I don't want to be the guy who freaks out and calls for something more significant every time we get a little bit of a pullback, but it looks like we've got pretty deep, but because we look like we have pretty decent support at the 46 area, and we do have a rising 50-day moving average, and generally want to give the benefit of the doubt to the buyers as long as it remains above that level. Now, I also suggested yesterday in the semiconductors that the short-term trend had gone back from neutral, which is what I was calling it in here, back to negative yesterday because that 37 level, which had been support, was definitively broken yesterday. And when it broke down through there and then it couldn't rally again today, you knew there was a big problem. And look at how this 5-day moving average had been declining in here. There was really no reason to be a buyer in here. What we were looking for and what kept us on the sidelines was a move earlier in the week above 37.60. It failed to do that day. I thought it would get above 37.60 and suggested a purchase above there because that would then drag this 5-day moving average higher. That was all just supposition, though. There was no reason to take the trade because that's just one potential scenario. And we want to be aware of all the different potential scenarios, but until you have that answer, there's no reason to get long in here. And on the daily time frame, it looks now like maybe this is the bigger volume that's coming at the end of the move down towards that rising 50-day moving average. Looking at the weekly time frame, again, we had this breakout past this 36 level. So 36 is definitely an important area for this semiconductor market. And if you look at the rally in here, you could say that it's just a pullback to prior resistance. Prior resistance tends to act as support. It doesn't mean it's at support. It doesn't mean it's a good purchase candidate in here. It should act as support. So let's see if support develops in this area over the next couple days. You might think, well, if I buy it at 36 and set my stop, well, then you're just guessing, in my opinion, because the short-term trend is down. And what you want to wait for is an alignment of trend. You want to wait for the short-term trend to confirm what you're seeing on the longer-term trend. One reader suggested maybe this is a head and shoulder top to me this morning in an email. And I said, yeah, maybe, but because the primary trend is higher, I didn't think so. But if you take a look at maybe 38 and a quarter down to 36.62, that's $1.75 lower off of this level. That would give us a downward target of 35. Now, I hope that doesn't happen because it's a lot easier to make money, I think, in a bull market than a bear market. But we do have what should be support at 36. Now, a lot of times that support level first will get, it'll drop down through there and maybe pretty hard down towards 35.60, 35.70, and then rally back up from there. And that's the better case because it really shakes the short-term buyers out of that market. If we look at here just this recent move and say, okay, from these lows right in here, from where that move developed, we're almost at about a 50% retracement level. And look how that 50% retracement level also coincides with that 50-day moving average and this prior level of resistance. So we're approaching 35.75, 36 should be an area of support. Let's see if that support develops. I think sidelines is the best place for now. Unless you're already short as a trader, then that's a good trade in here. But you definitely don't want to be selling short after we've seen this drop. And this market's dropped 2.25 points over the last 2 weeks. Now is not the time to be selling short, in particular because we still have that rising 50-day moving average. The IWM, the level in here that we had been watching as resistance, we've been calling this a range-bound market, and this range-bound market broke past that range yesterday on the high end of $83 a share, with support down near about 81. But here we've got to be on high alert also for a potential bigger problem, because from failed moves often come fast moves. There's a lot of people, I think, still looking at this market and looking for the perfect place to buy, and catching a bottom is one of the hardest jobs on Wall Street. Like I like to say, it's just as hard as trying to pick the top in this rally has been for the bears. Now the bears got a day in the sun. Let's see if they can add to it tomorrow and the next day and so on. For now, I'm going to still give the benefit of the doubt to the buyers in all these markets because we have a rising 50-day moving average. And now is the time to just kind of step aside, let the dust settle, wait for the low-risk entry. Trying to pick a bottom in a market that's just declining like this is a lot of times a very expensive way to be engaged in the market. The stocks we're involved in, Actuate, we got involved at 6.34. I suggested raising your stop to $6.39. Got stopped out of that with a nickel gain today. Finisar, FNSR, we got involved over here at $3.74 a share, and we were stopped out of this one as well at $3.78 for a 4-cent gain. And the only open position is this TASR. We got involved at 9.32. Got close to getting shaken out at 9.20 right there. Yesterday I suggested raising your stop to 9.38. Now I'm going to say let's raise that stop up to $9.90.